We are at the Deutsche Bank Access India conference, and joining us now is Samir Arora, who comes in all the way from Singapore. Samir, hi, good morning.
And who's not from Deutsche Bank.
And who's not from Deutsche Bank. Okay, Samir, I know you have a lot of one-liners ready for us, so let's lighten up things a bit. This time around, there was bread and butter in the budget, but no jam.
No jam. No, I think that the budget was good, but as I had thought before, that it would be difficult for the government to disappoint you too much. But the interesting things are that how, because the market went up on Saturday, all the economists now say, which I was saying forever, so I am not surprised, that 3.9% deficit does not matter. And these are the same guys who were saying how we should do 3.6 and 3.7. But more importantly, I think I should have been a journalist, because today's headline, which all of you have missed, which I think is a big deal, seriously, is that Mr. Jayant Sinha has said in interviews that the last deficit was not 4.1%, but more like 5.5%. And that because of poor accounting, delayed payments and other things, it was presented as 4.1, I mean as a target by UPA. So to have numbers which were at that time, according to the current management of the country, so off, and that for everybody to ignore it, and when they say that it was more like actually 5.5, and we brought it down, people say, okay, next question. I mean, it's a big deal. In Greece, that was the problem, that the new government came in and said that the numbers of the previous government were fudged. So I would think, and I would suggest, that the government should put out publicly that what was wrong in the previous deficit, which I agree they were wrong, and that how those things are not there. That would increase the credibility of the whole number exercise very much, because then you won't say that 4.1 has become 3.9, but maybe 5.x has become 3.9. So it's a big deal, but it also shows how collectively we accept whatever number has put out as a previous number, that is, and just move on.
So now we have a new number, right? And there has been some relaxation in that number, the fiscal deficit target. But what does that do to the RBI's move from here on?
The first thing, that's what I'm saying, is was RBI part of the group which had accepted a 5.5 being presented as 4.1? The point is, unless we understand that, so it does look like serious progress if it was, okay, not 5.5, let us say above 5, because of delaying of numbers or early recognition of dividends or early forced payout of dividends from PSUs or whatever. So if it was actually 5 but presented as 4.1, but that means a system as a whole and all the economists and all the journalists winked and accepted that number. So therefore we can't say. But I would say in a broad sense, this was a good environment for India, and in that context, if the numbers have been corrected, and 3.9 also does not matter. But my main point to Lata is that 3.9, 3.8, she was the most hyper about this, and I was always telling her it doesn't matter, because you come to know the real number 6 months later. Broadly, it should be obvious to you that these are declining, that they are reducing up along a certain path, and if you miss 10 basis points here or there, it should not matter. And in that sense, it is good that nobody cares.
Okay, somebody cares, Samir, unfortunately, but that person may not be very important in the general scheme of things. But why are you complaining that you haven't got jam? You FIs have got a lot of jam. I mean, more space in some of the quality stocks you want to buy. GAR has been pushed out. Some clarity on MAT. FIs should be a happy lot, no?
Yeah. Actually, if more than that, this budget was made for a long short fund manager, because some sectors have been seriously hurt. And I think my biggest takeaway from the budget is actually not that what was done for certain sectors, but how certain sectors will be killed, and I think rightly so. So I think that real estate in India over time will crash like we have not seen, and I think it is not unhealthy, it is healthy. Because look at it, if we say that we are going to be hyper serious about black money, and let's look at Delhi, where in addition we have an Aam Aadmi party also saying the same thing, and now we have the center. So let's find out all the places where this black money would go. But nobody has put out that what are the negative of catching black money. I think, according to me, both those negatives are very positive for the market, and those are that black money goes only into real estate and only into gold. I don't think black money is used to buy pizzas or buy some, burgers or something. So I'm not supporting those. What I'm saying is, in a big picture sense, the biggest beneficiary of black money in India was real estate and gold. And when both these get hit, and real estate much more, I would think, because it is local rather than a global price, the beneficiary of that also will be the stock market and capital flowing into financial assets and stuff like that. But I think it is very seriously negative for the real estate sector. And we are delighted because, I have no complaints because we like those stocks, the private banks, the consumer which pays full taxes, or private sector banks which have this technical help now, or NBFCs which have better. So I am happy. I was saying that, I was telling her before, Sonia, that actually the only thing which you can say is a bit negative, not for me, but in general for the market as such, is that you don't have a new attractive sector to come into the main fold. It's all old sectors which were doing well for various reasons, not necessarily by somebody deliberately trying to help them, but they have been helped, and so we don't mind because we never liked the metals or real estate or restaurants and stuff like that, and all those will have much more problems now.
Okay.
And gold.
All right. No, fair point. But Samir, where does the investors' attention go now? Until now, there was this transformational budget which was helping re-rating of India. Now, do you think we should now start looking at earnings? And therefore, is India's outperformance at risk? I mean, global markets are on a high, so we may continue, but maybe India's outperformance is at risk here on?
No, I don't think it's at risk. I think the only thing is that you can say that at a lower level than last year, but it is more of the same. That means some companies will keep insisting that there's no change on the ground, and the investors will keep ignoring it. But in some sense, the outperformers will continue to outperform. But at a macro India level, I think the earning valuations, all that are not high. And please don't go by one quarter. Please, we have these 30-year or 100-year history of the stock market. Nobody looks at a quarter. They look at big picture, 80% of the crowd, 20% on the small picture, and then the confluence happens. Today, why was Nifty futures up today morning in Singapore? Primarily because the market was up on Saturday. Okay, so these things of day to day doesn't matter. The point in a big picture sense is that the overall valuations of the market are not high, and the government has done good stuff on the macro India concept. It has not specifically helped one sector. So let's say, even though I am also negative, as you know, for 20 years on state-owned banks, but philosophically, all that you are debating and everybody in India is wasting time is that $2 billion have not been allocated to PSU banking sector capitalization, because they are saying some 7,000-8,000 crore should have been some 20,000 crore. So are you trying to say that this whole country and its performance and the market and foreign investors will stop? Because for the moment, $2 billion out of a 200 and whatever 60-80 billion dollar budget has not been given, or that India over the next. But it is like that, not you.
Nobody said that. People only said you're negative on PSU banks. Nobody said they're negative on markets or on the economy because of that 12,000 crores.
No. I'm saying on PSU banks only. What I'm saying is, we push things as they are. I'm not saying I'm also negative on state-owned banks. I said on state-owned banks. What I'm trying to say is, we overanalyze these things. Okay. And the big picture is that India is in a sweet spot, and the budget would have had to do many more things to shoot itself in the foot. It didn't do anything bad. Yeah. They just didn't help one or two sectors. Like for me, they didn't help the housing sector by giving some incentives. So okay, for one day the stock will maybe, I don't know how much it is up today or down. But these are not going to change India. India is on a positive tone and undertone, and the budget has done nothing to hurt it in any way. So it will continue. Outperformance will continue.
No, Lata, I must tell you that although Samir's tone is quite moderate here today, if you follow his Twitter feed, you'll realize that he's extremely bullish on the market, because he did mention that long-term investors like him perhaps are going to Honolulu and Hawaii after the kind of move that he got in this budget.
Please don't spoil the tweet. It was long-term going to Hawaii and Honolulu, and bears short-term ko kya mila? Baba ji ka dash dash. So that was it was not a random tweet.
Okay, fine, we'll take that offline. But Samir, since you did mention that this budget didn't have anything new any new sectors to look at, how do you approach the market? Do you continue to remain bullish on the sectors that you were bullish on, like private sector banks?
So for us, it's private sector banks because of now, of course, additional help. NBFCs, additional help. Consumer, additional help in the sense that over time, these are the guys who anyway pay 25, 30%, 35% tax over time. And what we never liked, real estate, according to me, hurt very badly. Gold, very badly hurt. Telecom, badly hurt. Metals, in a sense, neither here nor there, so badly hurt, let's put it. And
what about autos? Nothing came out, but they've been doing well.
We like autos, actually, and so neither here nor there. So it's okay, we will continue. But broadly, what I'm saying is it was made for a long shot kind of a fun manner. So I'm very happy. But in a big picture sense, it would have been better to give, even though I'm short state-owned banks, give them their $2-3 billion, throw it at them, let the world move on. Now, at least the world, when they want to be disciplined, when they want to be balanced, they say budget is good, but you see state-owned banks have not been helped. But the absolute amount is $2 billion, which can come up at any time. Exactly, that's what I'm saying. Broadly, it was an adequate budget to move us along. Maybe it could have been a little one step higher, but my bet was before going into the budget was different, that they cannot hurt the market.
Well, Samir, the service tax, we are getting some details, and this was always in the works. Enabling provision for the these are statements coming from the finance minister, and it says there will be service tax, enable provisioning in the finance bill to levy service tax on all services provided by the government to business entities. So services provided by the government could include coal and spectrum auctions. So those also will get service tax. There is also a chance that there will be an additional 2% cess on services, and that could mean 16% for a lot of services. We don't know that just what that list is. So 14% on even on coal and spectrum auctions, plus another 2% we don't know that cess will apply on which kind of services. That list is yet to come. Samir, therefore, would your list of negatives include telcos in India, telecoms in India? As well, wouldn't consumption be crimped? Consumption be crimped because of such high service taxes? So those who are depending on people to eat out, pizzas and hoteliers, mainland China's.
Always negative. But before that, on telecom, I would think that if you know before the auction, which is about to happen, that you are going to pay service tax, I hope that much calculation people can do, that therefore now they are bidding, including 15, 14 or over time 20% service tax, this thing. It's maybe sad for somebody who bid a few weeks ago and now if they put service tax on them. But broadly speaking, other than these coal guys, and on that also look at the market. We pay obscene amounts of money to the government and people say that everybody is benefited. How can it be? So, when you pay, you're paying a contractual amount, but what you're supposed to get back, you have to either pass on to the customer or consumer, which may take resistance, or you have to get it back from government allowing you back and nobody taking it to court. But that's what I'm saying, we don't look at the negatives, and I think they were not negative but sufficiently negative impact on some sectors, which according to me is actually positive for India.
Okay.
That I really think that high real estate and high gold is a negative for India.
Okay. No, Samir, leave us with some numbers as well. What kind of levels are you now looking at in the market? As well, how should we ride it on other than private sector banks?
No, I've given you all my favorite sectors. My thinking is that the Indian momentum for the stock market was already up, and the budget had to be extraordinarily good from a stock market point of view, or extraordinarily bad to spoil that slope. Maybe the slope is a little bit here or there because some stocks may be hurt more and some will be helped. The budget is good, but it obviously clearly does not uniformly help all sectors. It is just for up to a point our sort of luck that we like those sectors which have been helped, because this technical issue of foreign ownership and all, we never thought of these things.
Just one more sector, if you're looking at the upstream oil companies. I mean, the government has budgeted about 30,000 crores for oil subsidies, and some of these companies like ONGC, etc., are moving higher today. Any thoughts on how to approach it?
Commodity plus PSU is more untouchable than commodity or PSU.
Okay.
All right. Well, we will have to leave it at that. Samir Arora, pleasure speaking with you as always. Thank you very much for joining us.